Lumber prices, which have been touted as the #1 indicator of inflation over the last couple months, have fallen almost 70% off of their highs. And today we're going to discuss what that means for real estate, what that means for inflation, and what that means for you if you're in the housing market. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where one lucky subscriber is going to win $5,000 to put towards their RESP, their RSP, their TFSA, to pay down their mortgage, to pay down other debt, or to simply do with what they like. But in order to win, you have to be subscribed. And thank you so very much to the 15,000 of you who already are. If you aren't subscribed, my question to you is, why aren't you doing it? Especially if you have that chance to win $5,000. So go ahead, click that subscribe button. It's free, it's easy, and it's definitely worth it. The definitive guide on how to manage your credit. Product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss lumber prices, and let's talk about what it means for real estate, what it means for you with respect to inflation, and so on and so forth. Because lumber has kind of been the #1 indicator of inflation for most people over the last couple of months. If you got into a conversation about inflation, everybody pointed first and foremost to lumber. They didn't point to the lack of travel in the travel industry. They didn't point to things like the prices of food. They didn't point to the lower prices of clothing and textiles and retail sales. No, they pointed to lumber because it had gone up astronomically. And we've talked about this quite a bit in the past in different videos. We've talked about the fact that a lot of it was to do with supply chain issues and the fact that certain lockdowns prevented lumber from being produced and so on and so forth. And here we are a couple months later, and as somewhat predicted, lumber prices have gone down significantly. So I'm going to jump into the headlines here to take a quick look at this before we discuss what this means for inflation and what it means for the housing market going forward. But let's just take a quick look. This is from the Globe and Mail. Lumber demand plummets as do-it-yourself boom ends. So in other words, people are no longer building their decks and all of the things that they built over the last year, which has lowered demand for lumber. And along with supply chain issues being sorted out as we open up from the pandemic here, what you're seeing is lumber prices basically plummet by 70%. And if we go and take a look at the NASDAQ here, so this is the NASDAQ website, we look at lumber prices. What you can see is here's lumber going back to 2017, 2018, it got up to about $612 in May, which is kind of prime building months. That's just after you've had the ability to dig up the foundations of homes in colder climates, and you've started to get into that building phase. So you typically see that May sort of increase in lumber prices. And if you go in and you look at 2019, you kind of see a similar sort of spike here. And then you get to the pandemic and prices of everything pretty much plummet. And that's where you see lumber prices go down to about $282 or $259. And then as people start to build out their decks, knowing that they aren't going to be able to travel and build out their yards and do their basement developments as they need more space, you start to see lumber prices come up in August, hitting a high. They jump back down in October, and then as the real estate market really starts to pick up in October, November, December, we start to see how our lumber prices go up significantly due to demand. So demand, along with lockdowns in those winter months, really pushed that price of lumber up. And, I remember talking to contractors during this time and they were saying, we never see lumber prices going back down, because if people are willing to pay this much for it now, they're never going to lower the prices. Well, here we are basically 7 months later, after the May framing season has pretty much taken hold, and we see lumber prices down to almost, not quite pre-pandemic levels, but definitely levels that haven't been seen since October or November of last year. And here's where this becomes an interesting conversation. I'm going to show you just a quick Kitco article. Now, Kitco obviously is a gold and precious metals company, so their articles tend to have a little bit of a twist to them with respect to inflation and deflation and whatnot. But, this is their headline. And the only reason I show you this headline is to point out that there is some deflationary pressure along with lower lumber prices. Because if you think about the highs here, May of last year, $1,418 lumber. Well, guess what? When May of next year rolls around and lumber prices are almost certainly going to be lower, down around this $600 range that they're in right now, Well, guess what? That's going to mean that next year there's going to be a lot of deflationary pressure on the economy, at least in the lumber sector. And we're going to see this in other sectors as well. We're going to have other sectors that pull up the inflationary numbers, but we, in theory, next year could very realistically see negative inflation, deflation, or very, very, very low inflation, lower than what is expected due to this decrease in commodities prices. And we're not just seeing this in lumber, we're seeing this across the board with different items, different commodities. Copper prices are down, soybean prices are down, and it's largely to do with the fact that supply is starting to catch up again with demand. So, really interesting conversation around this. And when we talk about lumber prices and we talk about housing, a lot of the times people are confusing the fact that housing prices have gone up with the fact that the material costs have gone up, and that's why they've gone up. So people believe that housing prices are higher because lumber prices were higher. And that's not actually what's happening. What's actually happening is the higher demand in housing and the higher prices of housing are creating more demand for the lumber, and that's what increased those prices of lumber. So here's the reality of it is, if you're expecting that because lumber prices have come down, that housing prices are going to come down, don't think that that's necessarily what's going to happen. And don't think that you're going to be able to act on that 6 months to a year down the road, because that isn't what's actually happening. The housing prices are based primarily on the demand or the shift in demand due to the pandemic, not based on higher inputs. If it was based on higher input costs, and that's why housing prices would go up, well, eventually the demand would come down, and that would decrease demand for lumber prices, and pretty much the prices would go down across the board. But we're not seeing that. We're seeing housing prices stay pretty flat, and that's because the demand in housing leads lumber, not the other way around. Demand in housing is a leading indicator for the lumber prices, not a lagging indicator. So realistically, if you're thinking right now that you're going to get a better deal because lumber prices have gone down, you're not. It's simply just not going to happen. The other thing that you need to keep in mind as well is that you may not be seeing the lower prices reflected in retail stores yet. And the reason why is because places like Home Depot, places like Rona, places like Lowe's have purchased lumber that was at the previous prices, and they are working through that lumber right now before the prices come down. So they're going to sell what they have that they bought at higher prices. They're going to sell that at higher prices before they start buying lower price lumber and passing along the lower prices to consumers. So what that means is if you have a project like we do, we're going to build out a new YouTube studio for you guys, because 15,000 subscribers later and 1 million views later, it's time we updated the set for you. Well, we're going to hold off on that another month or two, because we know that we're going to be able to get that lumber at cheaper prices in order to frame it out and then build out this beautiful new studio that we're planning for you. So, really interesting conversations here around lumber. I don't think anybody expected that lumber would plummet by 70%. I mean, at the beginning of the pandemic, I don't think anybody predicted that lumber prices would almost triple or almost quadruple, but I definitely don't think anybody predicted that they would come down 70%. I know we talked previously about the fact that as supply ramped up, we should start to see prices come down. We just didn't expect them to come down this much. And what really is interesting is the deflationary pressure that this is going to provide for next year, in the same way that the low base level prices of last year are basically indicating higher than what inflation actually is. I think that is going to be an interesting conversation come May, June of next year, when we see prices maybe not being as high as they are, and therefore the Bank of Canada perhaps not being able to make those same interest rate moves that they have been predicting. And I'm going to take you right back in here and show you this one more time, because the last thing I wanted to point out is if you look at lumber prices, basically from, let's call it July of last year to now, what we're seeing lumber prices that are very much flat on a year-over-year basis, which means that those high inflation numbers from the last couple of months should come down when we start looking at July, August, September data. And time will tell, but that's my prediction, is we're going to see those inflation numbers come down quite substantially in the next month or two. And this is being led, of course, by lumber prices and other commodities. So if you found this video useful, if you are looking at getting into the housing market, we have some amazing tools we've put together for you. We have secrets to getting the lowest rate. We have our first time homebuyer bootcamp, or our home buyer bootcamp. It's not just good for first time homebuyers, but for anybody. Links are in the description below, along with a 50% off coupon for the Secrets to Getting the Lowest Interest Rate course. And we've developed those courses because we understand that not everybody can come to Mortgage 360 to get their mortgage. But that doesn't mean that we don't want everybody to have the same sort of information. So we've created those courses. They are super low price. If you are buying those courses, you will get 10 to 50 times your money back guaranteed. We've also put an offer from Mortgage 360 in there to guarantee that you'll get 10 times your money back. And the whole reason why we put these together is because part of my why, or my why in general, is to inspire people to thrive financially and to give back. So this is my way of helping people thrive financially and also giving back by making sure that all Canadians have the same information that a Mortgage 360 client would get. So if you're looking at getting into that housing market, please let us join you on that journey, whether it's through Mortgage 360 itself or whether it's through one of our courses. And I sincerely hope that you found this video useful. If you did, do me that favor, hit that like button, hit that subscribe button, hit that notification bell. Don't forget about a race to 25,000 subscribers, and we'll see you on the very next video. Cheers.